And one example of that would be intellectual property. So software-rich companies in the past were difficult to insure, but that's no longer the case. Insurers have taken an approach of they won't try and understand the business, they'll try and understand the M&A process. And as a result, there is a much wider range of industries that you can insure nowadays. Going on to the period, the policy period will match the underlying survival periods in the acquisition agreement. Typically that's 7 years, but it can be extended up to 10 years. The scope of cover and the exclusions. So generally the policy is back-to-back, it's fully bespoke for each transaction, and the main exclusion is matters of which the insured had actual knowledge of, and also fraud by the insured. It's important to make the distinction that that is fraud by the insured rather than the seller. So on a buyer policy, you can have protection for seller fraud, and there's a couple of large claims in the market currently which, although due to seller fraud, are covered under a buyer policy. And of course, importantly, the insurer will waive all rights of subrogation against the seller under a buyer policy. So in the event that there's a breach of warranty, the insurer will pay out to the buyer and they will say, I'm not going to subrogate against the seller. This effectively limits the risk of the seller to the policy retention.
Thank you. When you, if you can stay on that parameter slide for just a moment.
Yeah.
One thing that we found over these last 10 to 13 years is that when you talk about the policy itself, and I think this would be in reference to the scope of cover and the exclusions bullets on your slide, 10 to 13 years ago, the policies were about an inch thick. So to determine exactly what was being covered and what wasn't being covered was rather difficult. Now the policies that are being written are much thinner, and it basically says we're covering the reps and warranties in the deal other than, and then it'll specifically exclude, as you said, the items that are not to be included in the reps and warranties. So they're much easier policies to understand than they were 10 to 13 years ago. Have you seen that as well?
Yeah, absolutely. And I mean, we often say it's as close to a financial guarantee in insurance as you can get. And the policies are relatively simple contracts, and they are accepted as alternative security in a number of cases, which I think just reflects the fact that they are simple contracts, very clear, and if there is a claim, then the insurer will stand behind the policy and make good the loss. So definitely I agree with that.
Excellent. And back up to the policy limit choice. When a client is making a choice on limit, have you seen any tie to policy limit to escrow on the deal?
Yeah, absolutely. And often the policy limit will be the escrow amount because the seller is using insurance to avoid an escrow. And we're seeing a growing number of sellers structuring their deal around insurance and managing to walk away on day one with 100% of the sale proceeds with nothing else wrapped up in escrow. So very much so, and that is often the limit that is